What's up everybody? Tom here with another video. The stock markets right now have ground to a halt, but the question is there opportunity somewhere else? Well, it looks like we're getting opportunity lying in things such as the crypto markets and of course commodities markets right now. We've also got a sneaky US 10-year that's getting very, very high. Will this be something that pulls back the Nasdaq? Stay tuned to find out more. All right, guys, well, here begins our market recap for the markets closed 15th of November 2021. And remember, in this video, we'll be covering off our thoughts on the S&P 500, Nasdaq, Russell 2000, Tesla, gold, silver, US 10-year, and more. Tesla was down 1.94% on the session, and that's something that has continued to be a little bit of a story over the last week. Ever since we found out Elon was selling a portion of the stock, of course, and the other people of the board, that's led to a little bit of negative commentary on the stock, and overall, this will lead to probably a bit of stagnation in the technical analysis for some weeks, if not months, in Tesla. Let's move over now to what we've got going on here in the market in terms of stock market indices. We can see that it fell during the start of the session on Monday, and then there was a slight recoup near the end there. I actually thought it would go red or a little bit bearish near the close. It didn't really do so. The infrastructure bill was passed, signed into law, all of that type of stuff. And while the market expects this, hence why it's not moving that much after hours, it's still a little bit of an injection of growth, I guess you would say, or what people perceive as being a good thing for the markets. Let's take a look, though, which sectors were the most popular. And sometimes this can help us get a bit of an idea of what's going on in the market. And interestingly, utilities was out. So 1.32%. Utilities was the #1 performer in the market. We also had consumer staples up there. And a few of the more defensive components of market sectors were actually doing the best on the session. TAN, which is the solar index ETF, that came down the most. And that's had a great couple of weeks of run on it. And it still looks quite bullish over the longer term. Let's talk about earnings, because we still are in earnings. We saw Lucid come out with a pretty good result, went up after hours. We've got Walmart before the open Tuesday, SEA, so that's Shopee before the open Tuesday, and then we have some big ones after the close. Nvidia at resistance Wednesday. Join us for the live stream. That's going to be a big one. We've got some Asian stocks as well. We've got, of course, Alibaba, Baidu, the Chinese stocks coming out. Will they finally turn it around in terms of sentiment? Let's get into the technical analysis straight away, though, because this is the area where everyone is concerned. And what is on everyone's lips? Inflation, 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 or stagflation, or whatever else people believe. We've got a fantastic trend line now here to follow on the US 10-year. We've had that for a little while. It bounced off it, instantly kind of rebooped in terms of going all the way back up. And this is exactly where we now start to think, okay, well, what's next for the US 10-year? Will we see the US 10-year shoot to all-time highs in terms of the last 12 months, 24 months? Will it get past that 1.8%? Well, here is some technical analysis. We've got the left shoulder, the head, the right shoulder. Should we breach this really significantly over the next 24 hours? Guess where I believe it's going? I believe that we might be seeing a 1.75 reading fairly quickly on the US 10-year. And if the US 10-year goes to 1.75, what do we know? That tends to put a decline on things like the Nasdaq. Now, a few people have said, but Tom, at the moment, it seems like every time the US 10-year goes up, the Nasdaq is ignoring that. It's because we're in or trading within a range that we've seen before. We saw it before over here in that March area in when we were seeing the declines in the Nas. This time around, we're getting back up there. When you breach new highs, so let's say we get past 1.7, 1.75, that's when you'll see the Nasdaq really get affected. It's when you do something that it isn't used to, that it hasn't seen before, that tends to rock the market. So if you're a bit of a bear at the moment, or you think the market's overpriced, you're kind of hoping against all hopes that the US 10-year does go up, because that's going to be the thing that I believe will bring it down at this point. Here's the movement up, and here, of course, is the trend line as we're looking at it. Now, if it goes past 2%, would that be really bad? Yes, I do think 2% plus is not going to be a positive sign, and it's probably going to force the Fed's arm in terms of maybe thinking about an interest rate hike faster than expected. This is the problem that we've got in the markets right now. It's a bit of a juggling match between certain sectors of the economy that aren't doing so well and certain sectors that are doing amazingly well. And then, of course, we've got jobs and everything else. And what can the Fed do? And I'm not here to debate that, but I am saying the further that US 10-year comes up, the more likely it is that the Fed will be basically forced to take action. And we'll see whether they'll do that. At the moment, it's all transitory, yeah? That's the word, transitory. Seems to be coming out of the numbers whenever we look at used car sales or any of those other things. US dollar is also increasing, which is kind of signaling the idea that we might have a rate hike faster than expected. This is on the move to 97. We've talked about the big double bottom, and this is an interesting one as well, because what we have is we have gold moving up, silver moving up, US dollar moving up, and US 10-year moving up. Now, some of those move up together, but not traditionally gold moving up when US dollar is moving up at the same time. So that'll be very interesting to continue to watch how that plays out. Strength on strength on strength. There will be pullbacks across this US dollar movement towards, let's say, the 97. The reason we get 97 is because of the double bottom. So this is the big double bottom weekly. It broke through. We got bullish. It takes time. That's the nature of this type of thing. And that's how we get to that number. Because, of course, when we extrapolate this out, it hits around that 97. A, which is the bottom bit, or the part of the pattern, equals B. And that's how we really look at it in the markets at this stage. Move over to gold. Gold hitting around that resistance. This is the weekly. You can see how big and important that break of 1832 is. Next stop, 1910. We're at the other resistance at this stage. And then past that, 1930, 1960. I think we've got very clear guidelines for what we want gold to do. And it's kind of just slowly sitting around this zone at this stage. Let's have a look at the 2-hour chart and the 4-hour chart to get a bit of an idea. So what you notice on the 2-hour chart here is it's continuing to make a series of higher lows. And this is important. A lot of people will draw this up on a 4-hour or a 2-hour and they'll say, Tom, it looks like an ascending triangle. And you would be completely correct. An ascending triangle, the essence of it is it should break before the last third. So really it should be breaking very, very soon. And the idea is it's a series of higher lows that's showing that there's momentum and strength coming in from the market here. And if it breaches to the upside, then we go the distance of the 2/3 here. So this about this area around here is what you extrapolate out. Now, I tend to look at this both ways. If we breach underneath this important zone and we close underneath our triangle, that's kind of signaling, all right, maybe we got to go back and test the 1832 level. So you can actually trade triangles from both sides. You'll find that they work pretty well. Once they make a decision because of this trapping of price, think of it as a coiling of the market indicators and everything like that. Once it makes a decision either way, you'll find them go pretty well. One of the things I'm looking at is the 4-hour 20 breach underneath. And the reason that's the one for me, if we are going towards the short side, is because 3 times now it's found buying pressure. It's been a good level. And only a close below this really signals to the next level, which is the 50 exponential, and that's around that 1832. At this stage, everything still looks bullish. We hopefully move through these previous week highs and we continue to go up. But it is time for it to do it probably in the next 1 to 2 sessions. Otherwise, we're going to get too close to the end of the triangle and it will peter out or exactly like weaken in many ways. Let's move over to silver. Silver also just floating around at this stage. One of the reasons why is it hit the daily 200 moving average, which is a serious deal. If you look at silver, it's found a lot of resistance and support off this zone. It's found resistance again. It's had this nice ramp up and close above. It's now just looking to consolidate the indicators. And like gold, we're waiting for that next move up. And silver has a lot of opportunity on it. It's one of these commodities right now that has that really good participation zone. I mean, you've only really got some problems at maybe $26.50 and then really up until $28, you've got a lot of runway. So we'll continue to watch silver and gold on the channel. They're back for now because they've got seasonals being the December period for them. And they've also got some really nice strong TA coming through. So we talked about Tesla at the start of the video and we talked about how it declined there. And there's a bit of, I don't know what it really is going on, a whole bunch of discussion about where Elon should put his money, how he should spend it, or what this really means for the company. And I think all of that creates a bit of FUD. And that's partially why, after such a big bullish enthusiasm, we see this bearish movement. Now, where does it go from now? Well, 1,000 is a strong psychological number, and I'm sure day traders have purchased off around this level, and they're looking to purchase this level, hopefully buy it up, and then get a little bit of profit out of it. But from an investment standpoint, 1,000, while it's not a terrible price, we've also got this 900, 888 previous resistance that could act as support in the future. We've got our longer term trend line, which we will not forget, and possibly even a top trend line here, which we can draw out in the next coming days. And I'm saying at this stage, we're in a neutralized market again. We don't really have, obviously the strength is still there overall, but on the shorter time frames, it's mostly bearish to neutral. If we bounce off this zone, we move back above that 1080, 1100 zone, well then, we're talking something completely different. At that point, we're talking about continuation of the trend back up to 1200, back up to testing these areas. But really at this stage, it's found the 1,000. It's a bit of a guess. You're really just basically going with the psychological number more than any one particular TA. Some people have said, but Tom, the 50 exponential 4 hour, but that didn't really work out, did it? It went straight underneath that, and now it's sitting underneath. So weakness is currently being shown in the Tesla stock. Move over to IWM, very similar scenario to what we've talked about in the last previous sessions. We've had a great breakout. That was explosive, fantastic. It's an entire index, so it's going to take some time to really get fired up. If we still expect the rest of the market to decline slightly or even moderately over the next couple of weeks before Christmas rush and the Christmas rally and Thanksgiving, etc., then the resistance here should act as support, and that might be a good load zone for some people looking at getting into this market index, because we have that A level, which is 2021's literal trap market. And if you take the distance here, we've extrapolated that out, and it comes up to about 258, 260. And it still seems to be one of the better, let's call it inverted commas, value markets at this stage. Nasdaq doing nothing. 2 hour doesn't really show us much. If we go over to the daily again, is it really showing us anything that significant about where we're at? It could still be the 2 steps down, 1 step back, 2 steps down market that brings us back to 15,600. It's one of those ones where I'm still super bullish on the market. I don't have too many concerns about it. But from a trader perspective, from a swing trader perspective, is this really the zone that you love buying? I would argue probably not. And I think a lot of the big brain community members are not really feeling it just yet. You do tend to get 20 moving average pullbacks after big runs, and I'm surprised it didn't come back and hit the 20. So that makes me think that we might be going peak, trough, lower peak, possibly lower trough, and maybe even to the 50 now, because it's taking so much time turning around. Nasdaq, not too shabby at this stage, but not too, great in any way, shape, or form. Still looks bullish, but we still hope for that 20 and that 50. Over here on the SPX, it's very similar, kind of just floating around at this stage. We don't have any clear new resistance breakouts. We obviously hit the monthly R1, which was a big deal. Usually you see a central pivot touch almost every month, and the central pivot begins down here, and that's again in line with the story that we talked about with the Nasdaq. The peak, the trough, the lower peak, and then the lower trough. The 20 maybe not holding if that happens, and then the central pivot and the 50 exponential being the key level plus previous resistance. This zone just makes so much more sense to me. This is just the area that from a technical analysis standpoint, I like it. You look at that and you think, yes, I like that a lot. Previous resistance, 50, central pivots, let's go. That's the kind of area that you're hoping the market can come down to just to be healthy. I mean, you don't want something that goes vertical like this. That's not good. It means that it's more prone to a blow off, and that's a brutalization of your account if you get stuck in that accidentally. Let's move over to the crypto world. So the crypto world is not looking so fancy right now. We spoke about it in the weekend video. We spoke about it in the live video today. It just had that kind of lower peak kind of scenario. Things were weakening here on the 2 hour. And more importantly, when we take a look at the daily, you might notice how significant this will be if it does close below. The entire run up here for Ethereum has been 20 hits and even smaller moving average hits on a very good, very consistent basis all the way. Then it starts weakening. So it's not like we didn't see this weakening occur. We get weakening, we get a shooting star, we get pressure to the downside, and then suddenly, bam, it goes straight through. And a lot of people can't understand why this happens, but a lot of that is got to do with the weakening of the market because so many people were bullish here that it's time for them to wipe a few of those out, get rid of a bit of leverage. And as you know, with any great rally, you always usually have a very nice pullback before that great rally. We don't tend to just rally, and then not have like a crash into another huge rally. That's what we tend to see on the Bitcoin. Bitcoin and Ethereum, same kind of thing, really, from this aspect. Again, Bitcoin was putting pressure on the 63.5 zone, put pressure on it, broke through. Now we're seeing it about to close significant timeframes underneath this zone. This puts in light pressure of around that 59,000 kind of area, the previous point. And if we have a look, that's also where the daily 50 exponential moving average is. And that's been okay at doing deeper pullbacks in the past. The 50 exponential is no slouch. It's certainly been a major market moving indicator, and I think we can use the exponential a little bit here. We hope it doesn't get underneath that, because if it does, where's your next step, guys? Unfortunately, I could see it all the way down at the 52K. So be careful. It is the time of year that Bitcoin usually has that last pullback. If we go back to 17, it had a pullback about a week before now. Then it began its huge rally. And it doesn't change our rally thoughts. I think there's a lot of bullish catalysts here in the market, but it certainly doesn't look as good as it was looking before. Let's have a look at the news coming out. We've got Wednesday news here, 17th of November. We have the CAD CPI and the Great British Pound. And of course, the big one here, Tuesday, November 16, 8:30 a.m. ET, that's New York time. Core retail sales and retail sales coming out. This will be the one that I think a lot of people are looking at, and possibly a few of these FOMC meeting speakers, just having a look at the wording they use across the meetings throughout the sessions. This will be a big one, and I hope everybody is having a great day. Thanks so much for getting us to 70K, guys. Please subscribe if you enjoy the videos. Give us a thumbs up. It does help us out, and we'll see you in the next one. Bye for now.